morning, everybody. It is Wednesday, hump day, October 22. It is Fibonacci Spiral Day. And here we are with futures vanilla. And I mean vanilla as in it is flat, dead flat. And that's the way that it is. Since we had our algo day there on Monday, we have not even threatened to fill the gap. But more significantly, other than the Russell 2000, which is having its continued volatility of plus minus 1% virtually every day for the entire month, it has actually made contact with the 5-day moving average. So that's about all that I've got for you there on the futures. And unfortunately,
I'm giving you an answer that maybe you don't like.
I don't have anything new to give you other than what I've already given you today and after the market opened on Monday, because 67.35.13, 67.35.35. I don't have anything new to, come up with or try and create. This is where we're at. We said going into the week that we were looking for a high midweek, because, again, this is one of 38 different, technical analysis items that you can use, instruments. October 22 is where our Fibonacci spiral date works out to be. And thus far, it has been very accurate, as had been the Fibonacci spiral from the February 19th, 2025 top. Very, very accurate. So here we are, and again, having traded in this little tiny range, 66.90 our open there on Monday, 67.52 our highs yesterday. You have a 62-point range for the course of the week, and again, the only thing that I'm concerned about is how we are trading positively on the month, which, hang on one second, hang on. Okay, we're back. So, again, I didn't want to have to force you to see me scrolling through, but as I come back here to October of 2024, and, the entire highlight of the month being the hunt for red October, we were cruising down red for the month until around October the 8th, and then we went green. And we stayed green for, the majority of the month until that final trading session on October 30th, on October 31. On October 31, where we took it all down, went down 108 points on the trading session for a close over close, and we finished the month red, minus 0.91%. But it was red after having had 1, 2, 3, 4, 5, just like last year, red months in a row. So I can get off of that, come back to where I was, but I'm not going to be using this anymore because, once again, what I had been sharing, and from the very, very beginning of the week, 67.20, 67.15, that's where my risk is. That's where I see as where the risk is at. Well, that's never worked the entire week. In fact, what has been working, as I've shared with you in the room in real time, is your 67.45, 67.40s, which both Monday and Tuesday closed full credit. Once again, if it's continuing to work, why not continue to work it? And that's where your safer risk, as it's detailed there in your chat, is where your safer risk is going to be. But yeah, your 67.20, 67.15, well, I'll show it to you real quick. Here's your SPX week to date from the open, and the identification very quickly of, boom, it's an algo day. And as you see, we came up here right into around 10:55, 11 o'clock in the morning, and then did nothing but go sideways until the end of the day here, where we closed above the Dingleberry. The Dingleberry being the October 10 weekly candle of 67.33.86. But as you can see, your dips have been very, very shallow. And just to highlight it out, here's your 67.25, let's call it. Since, 11:15 in the morning on Monday, we've been fractionally down for fractions of a minute 4 times over here on Monday morning. And then for, let's count it here, 1, 2, 3, 4, 5 for fractions of minutes over here yesterday, early in the morning. So that's where you're stuck, and you're stuck like Chuck. And whether you like it or you don't like it, just like I don't like the dogs barking behind me, it is what it is, and you just go around and you deal with it. 2018, I'll show it to you later, but again, nothing. I don't trade chart patterns. I'm not a chart pattern guy, but here we had this pennant that formation, which could solve to the upside, solve to the downside. And on the weekend, they decided to gap up, according to my kindergarten drawing, above where that resistance was on the pennant. And, quite frankly, that's what you got. So you can see back here, 67.24. That was your highs from back here on October 15th. So that's going to be your first significant downside pivot, is that 67.24, which, again, come back here, 67.25. That's your significant pivot. However, with your moving averages having never, ever, ever been touched, and obviously they will be moving up. The 5-day will be moving up. The 10-day, not significantly, and the 20-day, absolutely not significantly moving up. But your 5-day moving average will be moving to the upside. And when you are into these chop zone grinds, whatever you want to call it, that's going to be your primary number one alarm in the event that we get a dip, that when that 5-day moving average gets touched, guess what? It's going to get bounced. You got a 98% chance that's the way that's going to play out. Again, here on the QQQ, you're looking at your week to date from the early morning over here on the futures opening on Sunday night, where we were down below that 603.59. You're plus 50% above the April lows. And since the algo day kickoff over here on Monday morning, fractional visits to that 609.79. Fractional visits. And that's it. So, got earnings coming up, and those are obviously going to be playing a part, but from a bigger, broader, wider view, trying to stay with the bullish view, nothing's changed. And here you have on your VIX how we dropped below 1811. Well, that again, one of your 37 instruments that you can use for technical analysis, that will be your primary alarm that there is an opportunity that the SPX will be dropping below and touching or breaking 67.25, is to see the VIX recover back above 1811. For the VIX to recover back up above 1811, you're going to be looking at your QQQ breaking down below 609.79. That's just the way that it works. And over here on your Dow Jones, like I shared with you in the email that I sent out to you, my rationale number one, my reasoning why, and here you go. You look over at your Tuesday lows. Your Tuesday lows of last week over here at 454. Your gap to be filled over the weekend, which is down here at 461. I'm not calling for a absolute crash. I'm simply playing a dip like I've played on the other 85, 87, 32 trade alerts that I've issued out this year, which only 5 have not worked out. Again, here on the IWM, which again has been having quite significant volatility, looking at a wider view of a 15-day and how 248 working, 248 working, 247 working, resistance, and then boom, your big breakup last week. Oh my God, here we go, and we're up here in the 250s. Well, you're right there to your ABC, where 250, 257, 250, 257, 250, 277. And now here we are resisting back down below that 248, 247. However, you're still not breaking down below 244, your old all-time highs from multiple different dates. So you're just chopping around, doing nothing for the moment on the SPX, but I'll bring you back over again to where we're at with the QQQ, and closed red, but what is this red? I mean, you're closing down, less than a quarter of a point. You got nothing happening, nothing. Whereas on your IWM, once again, closing above, greater than plus 10% on the year, or year to date. And look at your volatility every single day since the middle of, or the early part of the month, October 7th, plus 1%, minus 1%, plus 1%, minus 1%. Very volatile, nice little movements over there on the IWM. So, 244.52, you're minus 1%, 249.46, you're plus 1%. However, when you come over to your IWM once again, and you see how you've got that fantastic resistance at 248.36, anybody who would be looking to play any kind of zero DTE puts on the IWM, you'd want to have an alarm at 248.36. So I got a couple little things that I can share with you. Other than that, I bring you on to your earnings. Netflix last night, I'll show you the chart. Nothing happened at all, nothing. Today after the market closes, we got Tesla and Apple, IBM. I'll share with those as you as well. But here, I wanted to get this done for you yesterday, but I didn't have the opportunity to get anything out. And this is what we're talking about with an algo day. An algo day. Algo days, my personal opinion, having worked in the industry, knowing how things work and, the way the rules have changed over the past couple of years, my opinion on these is that you have it where even though there are sell orders or buy orders, in this example, September 5, where we, boom, open, algo down on the S&P, algo down on the Russell. Not as much as you can see on other ones. But that what they do is they hold back the orders, and they don't trade them during the course of the day. They carry them on their books for the next day. And that way you typically tend to see you top out there around 11 o'clock, and then you just simply grind into the end of the day and the close. This is your September 16th, very much similar. Boom, 10 o'clock, you were done, sideways for the rest of the day. Here on October 13th, your big gap up, boom, done, finished. So that's what you had. And again, we're into that period of significance. We went through the summer of 2025 having broken all previous records other than 1997 for closes, consecutive closes above the 20-day moving average. And it was right there around August 8th when we broke down below the 20-day moving average. We did a very similar scenario over the course of this August. And here it was over on October 7th, where in 1997 we topped, and we bottomed on October 27th before making that move up higher, which obviously this is 1997. You've heard of this thing called the .com. No, I'll bring it to here first. Here again, 2018, which I've referenced to quite a few times. This has a very similar view to 2018, how we topped there at the end of September, double top there in the beginning of October, had our drawdown into the end of October, October 27th, 29th. And you had your 2018 October 29th low right there at 2603 from 2940, down, 340 points. And then we had our B-wave bounce up here into November, and then your chop around, move back up into December, where you had your 4 red weeks in a row down into Christmas, where we were minus 20% for 3 minutes. 2 minutes on December 24, 1 minute on December 26. And the reason I share it in the discussion of this is not that I'm looking for a minus 20% drop, but this here would be the greatest bullish case moving into the new year, moving into what is being still preferred, that we have one more leg to the upside before it's all over. But there again, I bring you here to the great Martis, which when you're doing your own work, you always want to check it against other people who have a history of work. And here it is. He's posting here 2 possible scenarios I've identified. A larger broadening formation is unfolding, and we're about to start the 5th and final wave of this pattern. A slanting head and shoulders formation developing. No third scenario exists. Which formation is in play will take months to complete. I'll pin this for future updates. God bless and Godspeed. And here he is showing a chart of the NASDAQ. And this is posted on April the 10th. Now, many of you remember, I was calling for new all-time highs towards the end of March. And one of the 5 trades out of the 87, 88 of the 32 trades that did not work was me getting into the QQQ calls, which I had too early of an expiration date. I should have gone out further, but I was totally right with the whole scenario of it. And here it is. He's showing you this broadening pattern, the 1, 2, 3, 4, and the 5. And this is back in April. And here's your updated chart, Posted this yesterday, and again, I just share it for you so that you understand what is in front of you. This has to be the most graceful, handsome, majestic, magnificent broadening pattern we will ever witness in history. Let's consider ourselves lucky to be graced with such technical beauty. Below shown is the broadening tops 5th wave complete, which I can show you that the 5th wave is complete. The distribution box is now activated and will take weeks to play out as mentioned in the past. Hope this helps. And here again, he's showing you a picture of the NASDAQ and your 1, 2, 3. Boom, your drop here into April for your 4. And here we have our 5. And as you see, your distribution boxes. This distribution box that was over here on for your wave 3 in the center. This took place from December into basically February 19th, the 5-year anniversary of COVID, when we topped and started selling off. I struggle to, again, see a rationale as to a major market sell-off ahead of a new tax year. However, I bring you back to your 2018. This having had a colossal run of over 1,000 points from when Donald Trump won back in 2016, you had your correction at the beginning of the year in January, 11% over the course of 6-7 days. And then from April, basically April 7th, April 4, the run up here into September, October. This would be the best case bullish scenario going into the new year, where you can go in with profits that have been taken off of this recent rally that we've had of 50%. And then in the beginning of the year, or towards the end of the year, into the beginning of the new year, that's where you have the energy to be able to produce that 5th final preferred bullish wave before this happens. Right here. Oh, where is it? Where are you? Yeah, there. From that to bring you down to right there. Ba-boom. And you're going back to your COVID lows, your 2022 lows, your pre-COVID high, your COVID lows. It's not good. It's not good for anybody, but that's what's in front of you. So I apologize for having taken up too much of your time on a Wednesday morning. I do hope everything works out for you well today, and I will be in the chat room. And as long as it is not another 22, 23, 30-point grind day, message me as much as you want to.